In this video, I'm going to look at the weaknesses of the property market in this COVID-19 world. Political uncertainty has got to be one of the major weaknesses that's added massive doubt to the property market. We had Brexit, years of fudge and indecision under a weak Tory government under Theresa May. Will we leave Europe? Won't we leave Europe? I mean, it's still continuing today a little bit, is how we're going to leave Europe. Is it going to be just falling out of the European market at the end of the year, or will we get a deal? So we still don't really know, and that has kept the property market subdued because of the uncertainty there. Away from that political uncertainty of Brexit, elsewhere in the economy, and I think this one's a little bit ironic, is the Help to Buy scheme is actually weighing on the property market right now. Reporting back in June, the FT reported the CEO of Taylor Wimpey saying that the scheme's introduction in 2013 has brought forward price growth significantly, acting as an accelerant, which helped prices hit peaks from which they are now flat or falling back. So where that gave a boost to the market, now it's a little bit of retraction. So that's weighed on the market a little bit. Back to the government. Landlords have proved an easy and lucrative target for the Exchequer. We've seen many squeezes on the landlord industry with increased regulations through licensing scheme, removal of agency fees, proposed changes to Section 21 evictions, reductions to lettings relief, and possibly most importantly the Section 24 changes to the tax law, which is being phased in currently. And basically that is removing tax relief for higher rate taxpayers and changing it to a system where it's a tax on turnover rather than a tax on profits. So all in, we've seen massive extra tax burden and regulatory burden put onto landlords. So all these factors, deliberate or otherwise, has led to a reported 27% of landlords looking to exit the market by 2021. Obviously that would increase the supply of properties on the market, and if you couple that with the political uncertainty, that certainly has a potential to hold property prices in check for some time to come. We've just seen the property market open up again, so this might not be a total surprise, but COVID-19 has quite unsurprisingly affected the transactions in the market. 2019 saw about 1.2 million transactions, and 2020 is expected to be about half to 3/4 of that figure. So quite a contraction to the market and a big loss of transparency and transaction data, which we're not really expecting to recover into about 2021. I mean, that drop of transactions is obviously a combination of two things. With COVID and the lockdown, people haven't been able to buy houses, but it's also reflected mortgage companies have been pulling out of the market, scuppering deals. I've been trying to do a deal personally since the start of the year, and the latest thing was they stalled it because they can't get a surveyor into the house. So it's frustrating. All I can do is sit and wait for the market to come back or the lockdown to ease. Hopefully that's going to be very soon. As to the future of the market, expectations and confidence you see is not there right now. RIC's reporting that prices are expected to fall in the next 3 months by 71% of its respondents, but price falls only 38% think there might be a price fall in the next 12 months. So again, that sort of bears out what we said previously. There might be a bit of short-term pain, but hopefully in the long run that things aren't so bad, but obviously there's no guarantees. And so we're looking at the weaknesses here. So yeah, there's a lot of pessimism in the market, and that's going to put downward pressure on prices and downward pressure on transactions. It's easy not to do something and not take a risk if you're not sure. So I hope that was useful. I'll see you on the next one. Bye bye.
Please don't forget to like, subscribe and comment. Thanks. See you on the next one.